In Chapter 7, we're going to be looking at one of the internal control measures over cash, and that's bank reconciliation. Just as we as individuals have to monitor our cash and bank account very closely, all businesses also do the same. At least on a monthly basis, companies will prepare a bank reconciliation. In fact, it is required for all companies are audited by an external auditor. This is one of those internal documents. It's not shared by anyone with anyone outside of the company, but the auditor always will ask for the 12 bank reconciliation statements to see if we in fact have a control over our cash. So let's look at this problem. We've been told in problem 7-4A that the bank portion of the bank reconciliation statement is as follows. This was on October 31st, 2017. This was for last month. We had one check that was in transit. It was deposit in transit. Deposit in transit means I have put the money into the bank. It has not yet cleared the bank. When it does, it'll get added to my account. I also had 5 checks that I had written out in payment. They had not cleared the bank. When they clear the bank, that money will go out of my account and my balance will drop. So I had 1 check in deposit that was in transit and 5 checks outstanding last month. For the current month, the bank statement says I have the following checks that I have written out and that have cleared. And these are the deposits that I've made and have been added to my bank account. This is as per the bank statement. My cash payment statement says that these are the checks I have written out in payment. What I will have to do is cross-check these checks that I wrote out with the bank statement, and also from last month, what I still had outstanding, did it clear this month? Cash receipts is the money that I got and deposited into the bank. Again, I'll have to check with the bank. Did the bank say that I got these deposits? And when I look at the deposits, I'll also look at the one that was outstanding in the previous month, deposit in transit. Further, I'm told that the bank statement contained 2 bank memorandas. A bank memo is basically the bank advising me about transactions that have taken place where they have either added money to my account or taken money out of my account, obviously with my permission. It's just that I'm seeing this now. I have not made a record of it, and I'll have to update my records. They tell us that November 30th, the cash balance as per our books is $11,073.80, and the cash balance as per the bank statement is $17,712.50. They've told us the bank has not made any mistakes, but we have made 2 mistakes. They've asked us to follow the bank reconciliation procedure as is given in pages 355 to 356 and prepare a bank reconciliation statement at November 30th, 2017. They've given us a final answer, the adjusted cash balance, what the number should be. And then finally, they've asked us to prepare the adjusting entries for the bank reconciliation statement, from the bank reconciliation statement. Now, to make this process a little easier for me to explain to you, I have copied that information down over here in my Excel file. So what you see over here is basically what was in the textbook, and I have the information over here, and I'll tell you in a couple of minutes why it's easier for me to use Excel all the way through. I have to do 2 things: prepare a bank reconciliation statement, and I'll be preparing adjusting entries. We'll wait on the adjusting entries until later. So let's look at the bank reconciliation statement. This is from the last month. So I need to prepare a similar one for November. So November 30th, 2017. Cash balance as per the bank, and below over here I have cash balance as per our books. So cash balance as per our books is given to me as $11,073.80. Cash balance as per bank is $17,712.50. Neither of these numbers are correct. We have to find what the adjusted number is after we made the corrections. So the starting point of the bank reconciliation statement is what the bank says we have and what our books say we have. The next step is going to be, we'll have to look and see, are there any deposits in transit? And then subsequently we'll be seeing, do we have any checks outstanding? Okay. So I'm going to scroll down a little so I can see the entire information that I need over here. So let's start with, I had a deposit of 1530.20 last month. Did that clear the bank this month? The answer is yes. So what I'm going to do in order to explain this to you is I'm going to put a line through it indicating it has been taken care of and I don't need to worry about that number. So I'm going to be going through this process several times. So bear with me as I do this. Okay. The next I'm going to look at is my cash receipts journal, and I cross-check it with my deposits. So I'm going to highlight this over here in a different color so you know what numbers I'm going to be comparing or what sets of numbers I'm going to be comparing. So I have 1211.60, I have 1211.60, they've been taken care of. 990.10, 990.10, 2575, 2575, 1472.70, 1472.70. I see those in both places. I have 2954 and then I have 2945. Okay, so I'm going to go ahead and the previous four numbers, which were the same in both places, I'm going to put a line through it to indicate these are numbers I don't need to worry about. Okay, this number, I'm going to put this in a different color over here. On the 20th, I deposited 2954 according to me. The bank says I deposited 2945. I was told the bank did not make any mistakes. I made a mistake. So here's one mistake I've identified, and I'll see how to take care of it. Let's continue with the other numbers and see whether they've cleared the bank. 2567.30, the same number over here. I have 1650 here, 1650 over here, 1186 and 1186. Okay, so these numbers, again, I'm going to put a line through it indicating they have been taken care of. So those numbers, again, I do not have to worry about them because they have been taken care of. So I identified one mistake, and there's this one number over here. This number, 1304. I deposited in the bank. The bank doesn't say it has cleared as yet. So this is going to be my deposits in transit. So the first number that I bring into my bank reconciliation statement, deposit in transit, is this number that I got from here. So again, let's try and color coordinate this so you know where the number came from. Next, I'm going to look for checks outstanding. So checks outstanding, these are the check numbers, and in the problem, these are the check numbers the bank says that I've cleared, and then these were from last month, and then I have additionally all these checks that I wrote in the current month. A little painful, but we got to go through the process to see whether it's cleared or not. So the first check is 2451. If you look over here, it starts with 2470, which means this is still outstanding. It has not cleared the bank. I'm going to go ahead and put this in a different color, indicating this is a check that's outstanding. The next one, 684.20, I wrote that last month, and it has cleared in the bank this month. So these numbers, again, I'm going to put a line through it, indicating I no longer have to worry about it. So we continue the process. 844.50, it's cleared the bank. So 844.50. Okay. The next number, 426.80, check number 2472, not yet cleared the bank. So this is yet another check that's outstanding. Okay, so I'll have to take care of that. Next number is 1050, that's cleared the bank. Again, bear with me as I put the line through this over here to indicate that it has been taken care of. Okay. Now we compare with the list we have over here and what has cleared the bank. You'll already see that not everything has cleared the bank, as visually you can see the number of checks I wrote is more than what I have over here. Let's go through the list here quickly. 1640.70, that's cleared the bank. 2830, 2830, 600, 600. So we have 3 checks that have cleared. This next one, 538.20, that's not cleared the bank. So let's mark the other 3 that have cleared. So identified the 3 that have cleared. This one has not cleared the bank, so I'm going to highlight that. The next one is 1705. Here it says it's 1750. Let's look at the check number, 2479, 2479. There's a discrepancy over here, so I'm going to put this in red to indicate that somewhere there's a problem. Once again, what does it mean? Cash payment means I say I made a payment of $1,705. The bank says I made a payment of $1,750. Who's correct? The bank. How do I know that? Because I was told the bank has made no mistakes. I've made 2 mistakes, so I found my second mistake now. Let's continue with the list. I have 1330 here, 1330 here, 695.40, say the same number over here. The next number I see over here is 575.50, which I have over here, but this number has been, it doesn't appear. And let's look at the check number, 2482. 2482 has not cleared the bank. The previous 2 I said had cleared the bank. Again, I'm going to go through and indicate that they've cleared the bank. The next number is 575.50. We have that over here. We don't have this next number. And we have this number also we don't have. So I'm visually looking over here to see if it has cleared the bank or not. These 2 have cleared the Okay, now that I've gone through this exercise, I want to look at these numbers again that I have in blue to make sure, in fact, that they have not cleared the bank. So these are the ones that have cleared the bank. So 1260.40, I don't see that number here. The check number was 2451. I don't see that number over here either. Then I have 2472. That's not cleared the bank. The amount was 426.8. That has not cleared the bank either. Check number 2478. That one has not cleared. If you notice, I have 77 and then 79. Then I have 2482. Again, that's not cleared the bank. Then I have 84 and 85 has not cleared the bank, if you look at the comparison over here. And then 87 and 88 have not cleared the bank. So I'm going to list the checks outstanding: 1, 2, 3, 4, 5, 6, 7, 8. I'm going to list the 8 checks that are outstanding. I listed all the checks that are outstanding. I listed the check numbers, just as had been done in the previous month. I listed all the amounts, and just like in the previous month, I'll add up all of these amounts. So, cash balance as per bank, add deposits in transit, less checks outstanding. I'd have made an adjustment if the bank had made a mistake, but the bank has made no mistakes. So at this point, I can calculate my adjusted cash balance per bank, 13,176.80. And if you go back to the exercise, they tell you that in fact is the adjusted cash balance number. So I know I'm on the right track over here. Let's go back to the problem. We've taken care of that. So what needs to be taken care of now is the errors that were made and the additional piece of information we received over here with the bank reconciliation, with the bank statement. The bank statement says we have 2 memos. One is a credit memo and the other is a debit memo. I'm going to pause over here for a minute and talk about the credit memo and the debit memo and talk about what we mean by these terms and how it affects us. We've often heard this expression, the bank saying you have a balance of 20,000 credit, a credit balance. Now we know that cash is an asset. All assets normal balance is debit. So they should be telling us I have a debit balance of 20,000, not a credit balance of 20,000. So how do we have this discrepancy? Think about it from the bank's point of view. When I, as a business, put my money in the bank, is that money theirs? My deposit, is it their money? The answer is no. Essentially, I have loaned the money to the bank. The bank pays me interest for keeping my money with them. It's a loan that I've given them. So in their books, it's a liability, which is why they say it's a credit. In my books, it's a debit. Cash is an asset, it's a debit. My cash in the bank for the bank is a credit balance. So when the bank gives me a credit memo, they are adding cash to my account. When they give me a debit memo, they're subtracting, taking money away from my account. So the first one they say is a credit of 2,242 for the collection of our electronic funds transfer. So what I will write over here is under cash balance as per our books, I'll update my books and say add electronic funds transfer. I've abbreviated it as EFT. And this is basically someone has deposited money into my account, probably a customer, someone who owed me money has made a deposit into my account. And obviously I've authorized the bank to do this for me, take the money on my behalf. So now in my books, I'm going to add this 2242. They tell me there's a debit memo for printing checks. They printed checks for me and they charged me $85. They're not going to send me a bill in the mail. They're going to take the money out of my account immediately, which is what they have done. So they have already taken the money out of my account. I need to update my books. So I'm going to write over here, less service charges. And this is for printing the checks. That is just information for myself. Remember, this is an internal document, so I can be as lax as I want to in writing some explanations for myself. So I subtract $85. Next, let's look at this error that was made over here. This error that we made over here, The bank says I wrote a check in payment. The payment I made was $17.50. What I said I paid was $17.05. So from my books, have I under or overdrawn from the account? Underdrawn, I need to show that I have made a payment of an additional $45. So I'll need to do an adjustment for that. And that adjustment is going to be, I'm sorry, I looked at the second one. Just no worries. Get to this one here first. The adjustment is $45. I need to take $45 more out of my account in my cash account. I've already actually made the payment. I just am going to update my books. Now this next one, I deposited $29.45 into my account, but in my books I wrote I got $9 more. So what do I need to do? Again, it's an error correction, and I'm going to take the $9 out of my account. So in both cases, I had said I had more money in my account than I should have indicated. So I make those two adjustments. There's nothing else over here for me to do but add up the numbers. The adjusted cash balance as per books, this number should be the same as we had up over here. That's the entire purpose of the statement of cash flow, is to reconcile our cash balance with what is the correct number. So what the bank says we have versus what we really have. And if you notice over here, it's actually a smaller number. Our books, what we say we have versus what we actually have more money because this was the biggest item. That electronic funds transfer, money came into our account and we weren't aware of it, so we are updating our account. Now, the bank balance as per bank, the deposits and the checks outstanding, we've already done all of that. The bank is going to clear all these things for us. Okay? This is what requires an adjusting entry. Okay, specifically what we said, add and subtract. These are the things that require adjusting entries, and let's see how we will do it. So for the first one, money was owed to me and I collected it. Anytime you see add, cash has to be debited. So I'm going to write cash debit. I already know what the amount is. What should I credit? Why did I get money? Because someone owed me the money. If someone owed me the money, I had it in my books as an accounts receivable. So I'm going to decrease accounts receivable because I collected the cash. The next one is easy. Bank service charge, $85. We know the journal entry is for $85. It's subtracted, which means cash has to be credited. I'm taking money out of my account. And why am I taking this out? It's for service charges. Okay, so there are many different account names that are used. The most common ones probably would be miscellaneous expense, bank service charge expense, or it could be operating expense. It depends on the company what they want to label this particular account. I would probably go with miscellaneous expense. At this point, I'm just calling it service charges. Okay, let's look at the next one. We need to make these corrections of $9 and $45. Now, our textbook tells us that these corrections have to be to accounts receivable and accounts payable. So let's see which one is which. If I have written out a check in payment, would that have been for an accounts receivable or an accounts payable? Okay, so I'm going to do one thing here before we answer that question. We know in both cases cash has to be credited because we subtracted over here. Okay, so this $45 difference, is it accounts payable or accounts receivable? This one will have to be accounts payable. I make payment on account. This one I received money on account. The journal entry is cash debit, accounts receivable, credit. I did the journal entry for $9 more than I should have done. So I reverse it by debiting accounts receivable and crediting cash. So it's Seems like a rather cumbersome process. This is one of those areas where companies will actually want to do this manually and check a lot of this information because it's very easy to make mistakes on the computer, and it always helps if there's another set of eyes looking through this. There are various accounting softwares that will scrub these numbers and make sure that the dollar amount here matches with the dollar amount over here, check numbers, etc. But most companies, especially the smaller companies, they're very cash driven and they have to keep it very, very close tab on cash. And as you have read through this chapter, where do you have most of the theft take place? The number one item to be stolen is cash. The number two item to be stolen is inventory. With cash, it's much harder to find it because it's cash. You can't even say that this is my money unless you have some internal controls put in place. Bank reconciliation is a very effective internal control tool. All businesses do this, and this bank reconciliation document is something that is required for companies to keep in their books for 12 months, not just for the 12 months for the current year, but they usually keep it for a couple of years. Anytime they want to go back and check cash, they want to make sure that someone was looking through this and doing the bank reconciliation statements. The format in your Wiley Plus, you have to prepare the bank reconciliation, and then you have to do your adjusting entries. This portion where I went through, either Xing out, it's a lot easier if you have a hard copy and you can mark in your book. If you can do it on the computer by way of highlighting also, that's still easy. Conceptually, this is probably an easier topic to deal with. It's just a little mechanical and tedious in terms of being detail oriented and making sure everything is correct. Good luck with your assignment.